Wild to know that a 1% increase in mortgage rates could cost you over $30,000 across a 30-year loan. That's not just a stat. That's your future vacation fund, your child's college tuition, or your early retirement gone. In 2025, the mortgage landscape in America has changed dramatically. Rates are fluctuating. Lender rules are tightening. And hidden costs? They're sneaking up on buyers more than ever before. In this video, I'm giving you a real-time breakdown of how mortgages actually work, not just the bank brochure version. We'll unpack the different types of loans, reveal which ones to avoid, and walk through the entire process, from pre-approval to closing, step by step. You'll also learn the biggest mortgage mistakes buyers are still making in 2025, and how to avoid falling into the same traps. Whether you're buying your first home, upgrading, or investing, this is your mortgage masterclass. Live, accurate, and designed to save you money. So grab a notepad, hit that like button, subscribe, and let's get into it. What is a mortgage? A mortgage is a loan you take out to buy a home. But with a twist, the house itself acts as the collateral. That means if you stop paying, the lender can legally take the property through a process called foreclosure. At its core, a mortgage allows people to buy homes they can't afford to pay for all at once. Instead of handing over hundreds of thousands up front, you pay back the amount over time, usually 15 to 30 years, in monthly installments that include both principal, which is the loan amount, and interest, which is the cost of borrowing. Who are the key players in a mortgage deal? The key players in a mortgage deal are: Number 1, borrower, which is you, the buyer who's requesting the loan to purchase a property. Number 2, lender. This could be a bank, credit union, mortgage company, or even an online lender. That is, the institution that provides the money for your purchase. Number 3, escrow agent. An escrow agent is a neutral third party that handles the exchange of money, documents, and sometimes property taxes or insurance, ensuring both sides meet their obligations before the sale is finalized. What is the purpose and structure of a home loan? A mortgage is designed to spread out the cost of home ownership, making it more accessible. The loan is structured with the following: a down payment, usually 3% to 20%, that you pay up front. A loan term, typically 15 or 30 years. An interest rate, fixed or adjustable, that determines your monthly payments. An amortization schedule, which breaks down how much of each payment goes toward interest versus principal over time. Many mortgages also include an escrow account, where part of your monthly payment covers property taxes and homeowners insurance, helping to ensure those bills are paid on time. The bottom line is, a mortgage isn't just a loan. It's a long-term financial commitment and a powerful tool to build wealth if managed wisely. But if misunderstood or misused, it can become a burden. Knowing how it works gives you control. And in 2025's housing market, control is everything. Up next, types of mortgages in 2025. When it comes to getting a mortgage in 2025, one size definitely does not fit all. There are several types of home loans available, each with its own benefits, rules, and risks. Choosing the right one can save you thousands. Choosing the wrong one, that can turn your dream home into a debt trap. Here's a breakdown of the most common mortgage types in the US right now. Number 1, fixed-rate mortgage, FRM. This is the most traditional and most popular mortgage type. Your interest rate stays the same throughout the life of the loan, usually 15 or 30 years. Your monthly payments are predictable, perfect if you like stability and budgeting peace of mind. Best for buyers planning to stay long-term. Number 2, adjustable rate mortgage, ARM, also known as a variable rate mortgage. You start with a low introductory rate, e.g., 5 years, which later adjusts based on market rates. Sounds great up front, but your payment can increase dramatically over time. Best for buyers planning to move or refinance soon. Number 3, FHA loan, backed by the Federal Housing Administration, designed for first-time buyers or those with lower credit scores, requires a lower down payment, as little as 3.5%, but it includes mortgage insurance premiums, MIP, that add to the cost. Number 4, VA loan, for U.S. military veterans, active duty service members, and their families. No down payment required. No private mortgage insurance, PMI, backed by the Department of Veterans Affairs. Incredible benefits, but only for those who qualify. Number 5. USDA loan. For homes in eligible rural or suburban areas, backed by the U.S. Department of Agriculture. Zero down payment. Great for lower-income buyers. Must meet geographic and income requirements. Each mortgage type serves a purpose. The key is knowing your financial profile, how long you plan to stay in the home, and how much risk you're willing to take. Coming up next, the mortgage process, step by step. What really happens from pre-approval to closing. Up next, the mortgage process, 2025 step-by-step breakdown. So you've found the loan type that fits. What next? Now comes the journey through the actual mortgage process, a series of steps that takes you from dreaming about that home to finally holding the keys. Here's exactly how it works in 2025. Number 1. Pre-approval. Before house hunting, you'll need a pre-approval letter from a lender. This is where they review your income, credit score, debts, and employment. You'll get a ballpark figure of how much you can afford. Think of it as your house shopping budget. Without it, most real estate agents won't take you seriously. Number 2. House hunting and offer. With your pre-approval in hand, you start searching. Once you find the right home, you make an offer. If accepted, you move into the loan application stage. At this point, speed matters. Homes are still moving fast in some states in 2025. Number 3. Full loan application. Now the paperwork begins. You'll submit full documentation: tax returns, bank statements, pay stubs, IDs, and more. The lender starts the formal approval process. Number 4. Appraisal and inspection. Lenders don't just take your word, they send out a professional appraiser. Their job to make sure the home's value matches the sale price. If the home appraises lower than expected, your deal could stall unless the seller agrees to lower the price. Number 5. Underwriting. This is the deep dive. The underwriter reviews every detail to determine risk. They may ask for more documentation or clarification. Approval isn't guaranteed, but if all goes well, you'll get the green light. Number 6. Closing, also called settlement day. You sign all final documents, pay closing costs, typically 2-5% of the home price, and officially become a homeowner. The loan funds are transferred, and you receive the keys. From start to finish, this process takes about 30 to 60 days on average. Pro tip: don't make any major financial changes, like switching jobs or opening new credit cards during this time. Up next on this Mortgage Masterclass, interest rates in 2025, what you need to know. Mortgage interest rates aren't just numbers. They're the difference between buying your dream home or getting priced out entirely. And in 2025, rates are more unpredictable than ever. Where are rates right now? As of mid-2025, the average 30-year fixed mortgage rate is sitting around 6.85%. That's a far cry from the pandemic lows of 2.65% we saw back in 2021, but also slightly down from the 7.2% peak we hit in late 2024. If you're looking at a $400,000 home with 20% down, the difference between a 6% and 7% rate could mean an extra $200 to $300 per month and over $70,000 more in interest over the life of the loan. Tiny changes in rates equals massive long-term impact. What influences mortgage rates? Rates are shaped by several key forces. Federal Reserve policy. While the Fed doesn't directly set mortgage rates, their moves affect short-term interest rates and market sentiment. Inflation. Higher inflation often leads to higher mortgage rates. Bond markets. Mortgage rates tend to follow the yield on 10-year Treasury notes. Your financial profile, credit score, loan type, and down payment all play a role in the exact rate you're offered. Should you lock in a rate now? That depends. If you're comfortable with your payment and you've found the right home, lock it. You can always refinance if rates drop in the future. Waiting for the perfect rate is risky. Real estate prices could rise, inventory could shrink, and you might miss out on the home altogether. Some lenders now offer float-down options, where you can lock in a rate but take advantage of a lower one if the market shifts before closing. Ask about this. The bottom line is, in 2025, timing the market is nearly impossible. Focus instead on timing your life. If the numbers work now and you're financially ready, don't let the rate alone stop you. Up next, the hidden costs of a mortgage in 2025. So you've calculated your monthly mortgage payment. It fits your budget. You're ready to go, right? Not so fast. In 2025, many homebuyers are blindsided by hidden costs that weren't part of their initial budget, and these extras can add hundreds to your monthly expenses or thousands upfront. Let's break down the most common and most expensive surprises. Number 1. Private mortgage insurance, PMI. If your down payment is less than 20%, lenders will likely require you to pay PMI. Cost: 0.5% to 1.5% of your loan amount annually. On a $350,000 loan, that's roughly $150 to $400 per month. It protects the lender, not you, in case you default. Here is a tip. Some lenders now offer low down payment loans without PMI, but watch for higher interest rates instead. Number 2. Property taxes. Every county sets its own tax rate, and it can vary wildly depending on where you live. Texas and New Jersey, among the highest. Hawaii or Colorado, much lower. Expect to pay 1 to 2.5% of your home's value annually. And in 2025, rising home values mean tax assessments are climbing too. Number 3. Homeowners insurance. With climate change and natural disasters on the rise, insurance costs are soaring, especially in coastal or fire-prone states. Expect $1,500 to $4,000 per year depending on location. Some areas are now requiring separate flood or wildfire policies. Here's a secret. Be sure to get quotes early. Don't assume your old provider has the best deal. Number 4. Closing costs. These are the one-time fees due at the final signing, and they add up fast. Common fees: loan origination, title search, attorney, appraisal, escrow, etc. Average 2 to 5% of the home's price. For a $400,000 home, that's $8,000 to $20,000 up front. Here's your tip. Ask the seller or lender about credits or concessions to help offset these costs. The bottom line is, the monthly payment you see online? It's just the beginning. Always budget for the full cost of owning a home, or risk getting caught off guard. Up next, common mortgage mistakes in 2025 and how to avoid them. So, you've picked a lender, chosen your loan, and you're on your way to home ownership. But wait, many buyers fall into traps during the final stretch that can delay, derail, or downright destroy their deals. Here are the top mortgage mistakes we're still seeing in 2025, and exactly how you can avoid becoming another cautionary tale. Number 1. Changing jobs or income sources. Midway. This is one of the biggest deal killers. Lenders want stable, verifiable income. A job switch? Red flag. Switching from salaried to freelance? Even worse. Even if it's a promotion, your loan could be delayed or denied. Tip: if a career change is coming, wait until after closing, or clear it with your lender first. Number 2. Opening new credit accounts. Thinking about financing furniture or a new car while waiting to close? Don't do it. New credit pulls lower your score. It increases your debt-to-income ratio, and it makes lenders nervous. Tip: avoid any major financial changes, even hard inquiries, until you've got the keys in hand. Number 3. Not shopping multiple lenders. One of the easiest mistakes: not comparing loan offers. Rates and fees vary by lender, sometimes significantly. A 0.25% rate difference could cost you tens of thousands over the loan's life. Don't just go with your bank by default. Here's a tip: get quotes from at least 3 lenders, including a credit union and an online provider. Number 4. Ignoring the total cost. Some buyers fixate on the monthly payment and ignore the bigger picture. They overlook closing costs, PMI, taxes, and insurance, or choose the lowest rate without asking about origination fees. The tip is, always calculate the total cost of the loan, not just the monthly number. Number 5. Delaying too long. In a rising rate or low inventory market, hesitation can be expensive. Waiting for the perfect home or better rate often leads to higher prices, and sometimes no home at all. Tip: if your finances are ready and the home fits, act confidently. Up next, how to get the best mortgage deal in 2025. You've seen the risks. Now let's talk about how to win. In 2025, getting the best mortgage deal isn't about luck. It's about knowing how the system works and playing it smarter than the average buyer. Here's your personal strategy to secure the best loan, the lowest rate, and the strongest financial position. Number 1. Boost your credit score. Your credit score is one of the biggest factors in determining your interest rate. A score above 740 often unlocks the best rates. Even a jump from 680 to 720 can make a serious difference. use 2025's AI-powered credit simulators to quickly optimize your profile. Tip: pay down debts, don't open new accounts, and check for errors before applying. Number 2. Increase your down payment. The more you put down, the better the deal. 20% down eliminates PMI completely. A larger down payment equals lower monthly payments plus less risk to the lender. If 20% isn't doable, aim for 10% or higher. Here's a tip. Some buyers use gift funds or grants. Just be sure to document it properly. Number 3. Shop multiple lenders. Aggressively. Don't settle for the first offer. Get at least 3 to 5 quotes. Banks, credit unions, online lenders. Compare not just interest rates but also origination fees, closing costs, and APR. Tip: do this within a 45-day window so it only counts as one credit pull on your report. Number 4. Ask about rate buydowns. In 2025, more lenders, and even home sellers, are offering temporary or permanent interest rate buydowns. This reduces your monthly payment early on, especially useful if you expect to refinance later or have rising income. Tip: negotiate this into your deal, especially in new builds or slower markets. Number 5. Use a mortgage broker if you're overwhelmed. A broker shops multiple lenders on your behalf. They can access wholesale rates. Just make sure their compensation is transparent. The bottom line is, getting the best deal isn't about finding the lowest rate, it's about getting the best structure for your financial goals. Do the research, ask the questions, make lenders compete for your business. Up next to the final segment of this mortgage masterclass is mortgage trends you need to know in 2025. Mortgages aren't what they used to be, and in 2025 the landscape is evolving fast. From AI underwriters to government-backed incentives, here are the major mortgage trends shaping the game this year and how they impact you as a buyer. Number 1. AI-powered loan approvals. Automation is now everywhere, including your mortgage application. Many lenders now use AI-driven underwriting systems that can approve or deny a loan in under 24 hours. This speeds up pre-approvals and reduces human bias. But it also means your financial profile needs to be clean and well documented. Tip: make sure all your documents are clear, consistent, and digital-friendly. AI notices inconsistencies. Number 2. Flexible income documentation. More people are working as freelancers, creators, or in gig jobs, and lenders are finally catching up. In 2025, more mortgage providers are offering bank statement loans or non-QM mortgages for self-employed buyers. No traditional W-2? You may still qualify. Tip: keep at least 12 months of income records, savings, and tax filings ready. Number 3. Down payment assistance is expanding. With affordability still a major challenge, more than 30 states now offer first-time buyer grants, deferred loans, or closing cost help. These programs are often underused. Some even allow 0% interest payback after 5 years if you stay in the home. Tip: check local housing authorities and nonprofit programs, or ask your lender to guide you. Number 4. Seller-paid rate buydowns are back. To help buyers afford homes, some sellers and builders are covering interest rate buydowns. A big win for you. A 2-to-1 buydown means your rate starts low and gradually increases. This makes payments easier during your first few years of ownership. Tip: negotiate this during price talks, especially on homes sitting longer on the market. The bottom line is that 2025 is redefining how mortgages work, making them faster, more flexible, and sometimes more negotiable than ever. Stay informed, ask questions, and don't assume old rules still apply. And here's the wrap. Buying a home in 2025 isn't just about picking a pretty place with curb appeal. It's about understanding the real math and mechanics behind the mortgage that funds it. From choosing the right loan type, to decoding interest rates, to avoiding costly mistakes, to navigating new trends like AI approvals and seller-paid buydowns. You now have the full roadmap to make smarter, sharper decisions when financing your next home. But let's be clear, a mortgage is not just a loan. It's one of the biggest financial commitments you'll ever make. And in today's market, what you don't know can cost you tens of thousands. So don't walk into this blind. Get pre-approved the right way. Shop your rate like your future depends on it, because it does. Use this knowledge to protect your peace and your pockets. Now it's your turn. Have you applied for a mortgage recently? What was the biggest challenge you faced? Drop it in the comments. Let's learn from each other. And if you found this video helpful, don't forget to like this video, share it with a future homeowner, subscribe to the Globe Realty for more real estate truths that matter. Let's make homeownership smarter together.